welcome everyone to another VID Forum. I'm Mark Johnston, your host for the next hour or so, and we have the great privilege of welcoming back to our VID Forum session here the Gold Royalty management team. We have David Garofalo, who is the president and chair of Gold Royalty, and John Griffith, the chief development officer. Gentlemen, thank you for joining us today.
Good morning.
Good to have you with us. I want to say congratulations out of the gate because I understand there's a fifth acquisition since your IPO. We can't wait to hear more about how this transaction has unfolded and how it creates shareholder value. And yesterday, of course, you released an update to the market on a number of developments and catalysts within your royalty portfolio. We look forward to hearing a more granular picture on this, as well as your inaugural dividend program and how this all fits into your growth profile. At this stage, I'm very happy and humbled to step to the side, David and John, to let you take over with your presentation. And of course, we'll come back on the other side with some very hearty Q&A. But we do invite our audience from around the world to let us know in the chat window where you're tuning in from. And of course, do add your questions to the Q&A column so that we have that on the back end. For now, David and John, over to you.
Thank you, Mark, and always a pleasure to speak with you. Good morning, everyone. We're very pleased to be here today to provide an update on Gold Royalty's portfolio, including important recent catalysts that have been announced by the operators of the assets underlying some of our key royalties. The presentation today will be followed by a question and answer session where participants will be able to ask questions of management. We also invite participants to read our press release issued yesterday that provides further details of the topics to be discussed today. I'd like to draw viewers' attention to the disclaimer slide, which includes important information regarding certain forward-looking statements included in this presentation, as well as other important notices to readers. Viewers should review this slide in its entirety. I'd now like to hand over to Dave Garofalo.
Good morning, everybody. Thanks for joining today. And certainly it's a tumultuous day in the geopolitical side of the world with the Russian invasion in Ukraine. And I think it reminds us why gold has served as a safe haven for 4 millennia. It is seen as a protector of capital in these types of tumultuous times. But I think underpinning gold now and why we think gold is going to go much higher is exceedingly low interest rates, accommodative monetary policy. And what these geopolitical issues remind you is it's unlikely that central banks are going to take their foot off the accelerator anytime soon. I think they're going to remain accommodative. I think we're going to keep interest rates, at least on a real basis, at very low levels. And I think that's very, very strong for gold. It bodes well for the direction of gold. I think like we saw in the last significant inflationary cycle back in the 70s and early 80s, gold had quite a long run, even as nominal rates started to go up, because with inflation unleashed and continuing to accelerate, gold does very well. It's an accurate barometer of that, and it protects capital as the insidious effects of inflation eat away at your savings. And so I think gold's an important part of everybody's portfolio. And I think when you're looking at the way to play gold, we believe the best place to be is in the royalty sector. And in order to be an effective royalty player, you need to have scale. And what we've tried to achieve in the 11 short months since we launched our IPO is to achieve scale very quickly through the acquisition of 3 of our peer companies, Ely Gold, Gold Valley, and Abitibi. And more recently, we announced the acquisition of Cote Gold, a royalty on that. We're excited to announce that last Tuesday, we entered into an agreement to acquire a 0.75% NSR on Cote Gold for US $15.875 million from an existing holder, comprised of $15 million in cash and the remainder in shares of Gold Royalty. Cote will represent the newest Tier 1 royalty in the Gold Royalty portfolio. The asset is located in Ontario and owned by IAMGOLD Corporation as the operator and Sumitomo Metal Mining Company. Together with our royalty on Canadian Malartic's Odyssey project, Gold Royalty will own royalties on what is expected to be 2 of Canada's largest and longest life gold mines. With first cash flow expected in 2023, the acquisition of the royalty on Cote Gold project should further enhance our sector-leading growth profile and expand our portfolio to include 28 producing and developing royalties anchored in Tier 1 jurisdictions. This transaction represents the fifth major acquisition undertaken by Gold Royalty since our IPO last year, representing an unprecedented pace of growth and resulting in a diverse and well-balanced portfolio of 192 high-quality precious metal royalty assets. This enhanced scale drives increased trading liquidity, lower cost of capital, and ultimately higher valuations. Turning back to Cote specifically, our 0.75% NSR covers the southern portion of the proposed Cote open pit, zones 5 and 7 on this graphic here. These zones include higher grade mineralizations that are expected to be mined during the initial phases of production, thereby enhancing Gold Royalty's near-term growth. Key highlights of the transaction include that it provides a royalty, Gold Royalty with a royalty interest in a portion of one of the largest gold mines in North America. Cote is expected to produce 489,000 ounces per annum over the first 5 years and 367,000 ounces of gold over life of mine at second quartile all-in sustaining costs. It provides a near-term royalty cash flow from a mine that is under construction. Construction commenced in September 2020 and is 43% complete. First gold pour targeted for the second half of next year. It also adds a new premier operating partner in IAMGOLD, an established operator with a strong track record building and operating large-scale open-pit gold mines. It adds a long-life operation with exploration potential. The current reserve life is 18 years, 7.2 million ounces of open-pit resources and incremental reserves, plus additional near mine and regional exploration potential. And of course, it's located in one of the top mining jurisdictions in the world between Timmins and Sudbury in Ontario, Canada. IAMGOLD completed an update feasibility study on Cote just in 2021. The report describes a 36,000 ton per day open pit operation with an estimated annual production of 367,000 ounces of gold at an all-in sustaining cost of just $802 an ounce over the 18-year mine life. As you can see in the chart on the right, based on analyst consensus, production estimates, and current gold prices, the Cote royalty is currently expected to contribute approximately $1.9 million and $3.1 million of Gold Royalty's cash flow in 2024 and 2025, respectively, and approximately $12.7 million over the first full 5 years of production, when mining is expected to focus on areas covered by the royalty. Cote is expected to provide robust, near-term, and long-life cash flow generation in a Tier 1 jurisdiction. With 28 royalties already in production or development, Gold Royalty is currently expected to generate revenues of approximately $7 million in 2022, growing to approximately $23 million in 2026, based on analyst consensus estimates for our current portfolio and the expectations discussed earlier on Cote. This assumes the completion of the announced Cote transaction, which is going to occur next week. In addition, we believe our portfolio boasts embedded long-term potential driven by the advancement of key assets, including Malartic's Odyssey Underground, Fenelon, Ren, and Cote. When comparing our near-term revenue profile from the previous page to our peers, you can see that Gold Royalty boasts a sector-leading near-term growth profile with expected revenue growth of 58% a year over the next 2 years. Importantly, this growth is already paid for and comes from producing or near producing assets with premier operating partners and located in Tier 1 jurisdictions. By contrast, Elemental Royalties, for whom Gold Royalty announced a formal takeover offer in January, has only minimal growth as a standalone entity over the same period of time. Gold Royalty boasts a sector-leading diversified portfolio of 192 royalties. These span cash-flowing, development, and exploration stage assets, are anchored in Tier 1 jurisdictions of Quebec, Nevada, and Ontario, and are owned by premier operating partners. Our large and diversified NAV is largest in the sub-$1 billion royalty and streaming sector, and second only to Osisko, Triple Flag, and Sandstorm, intermediate royalty companies with market caps that are currently several times larger than us. Diversification is a key in the industry. It provides cash flow and growth optionality and protects against asset concentration, operator, and geopolitical risks. By contrast, Elemental, as a standalone entity, is subject to both asset concentration and geopolitical risks, made all the more pertinent given events currently transpiring in Burkina Faso, where they own one of their key royalties. In a combination with Gold Royalty, Elemental would contribute 9% of the pro forma net asset value versus 91% for Gold Royalty based on analyst consensus estimates. This combination would allow Elemental shareholders to participate in a much larger and well-diversified portfolio. It's also important to point out that as a result of our premium offer, Elemental shareholders would own approximately 12% of the combined company, despite only contributing approximately 9% of net asset value. Gold Royalty is one of the most liquid stocks in the streaming and royalty sector and is comparable to the large cap names in the sector, including Franco-Nevada, Wheaton Precious Metals, and Royal Gold. This slide measures liquidity based on the number of days it takes to trade each company's market cap. While there are arguably several ways to measure trading liquidity, the conclusion remains the same. Gold Royalty offers shareholders trading liquidity that is on par with the largest companies in the royalty sector. We believe a combination of Gold Royalty and Elemental will be mutually beneficial to both sets of shareholders. Gold Royalty is focused on creating preeminent growth-focused precious metal intermediate royalty company, and we strongly believe Elemental's portfolio perfectly aligns with this strategy. Elemental's mix of cash flowing and near-term development assets complements our growth-focused portfolio. Importantly, the acquisition of Elemental would add another cornerstone royalty to Gold Royalty's portfolio, a 2% NSR on Capricorn Metals' Karlawinda operation, Australia's newest gold mine, providing Gold Royalty shareholders with exposure to another Tier 1 jurisdiction, in addition to our existing portfolio in Nevada, Quebec, and Ontario. This acquisition also builds on Gold Royalty's strategy of partnering with premier operators, including Capricorn and Endeavour Mining. Finally, we continue to grow in a financially prudent manner, and the acquisition of Elemental is accretive to Gold Royalty on key financial and operating metrics. At Gold Royalty, we believe in the virtues of consolidation and that royalty companies with greater scale tend to trade at higher multiples. And this thesis is demonstrated by the graphic on this page. We believe that our increased scale, coupled with our immediate cash flow, geographic diversification, and growth profile, positions us for potential re-rate. I'll now turn it over to John to discuss our portfolio.
Thank you, Dave. As Dave mentioned earlier, Gold Royalty boasts a sector-leading, diversified portfolio of 192 royalties, spanning cash flowing, development, and exploration stage assets, anchored in Tier 1 jurisdictions of Quebec, Nevada, and Ontario, and owned by premier operating partners. This portfolio provides immediate cash flow, peer-leading near-term growth, and longer-dated optionality. This slide summarizes the key asset updates we'll be highlighting in the remainder of this presentation, which in turn sets the trajectory for continued cash flow and net asset value growth within the Gold Royalty portfolio. Turning firstly to Cote Gold Project, IAMGOLD announced that construction is 43% complete on Cote, with production expected in the second half of 2023. Based on analyst consensus production estimates and current gold prices, the Cote royalty is currently expected to contribute approximately 1.9 million and 3.1 million to Gold Royalty's cash flow in 2024 and 2025 respectively, and approximately 12.7 million over the first full 5 years of production, when mining is expected to focus on areas covered by the royalty as part of the 18-year, 6.6 million ounce life of mine. Turning to Ren, Barrick announced a maiden inferred mineral resource estimate at Ren of 1.24 million ounces of gold, grading 7.3 grams per ton. Importantly, drilling continues with mineralization open in all directions, with fourth quarter 2021 exploration drilling targeting upside potential and resource expansion outside the recently defined resource. Turning to Odyssey, Agnico Eagle and Yamana announced mineral resource growth at the Odyssey Underground project at Canadian Malartic, with 2.35 million ounces of indicated gold mineral resources and 13.15 million ounces of inferred gold mineral resources reported at year-end. And Odyssey is on track for first production in 2023. Turning to Fenelon, Wallbridge Mining announced a Canadian dollar 70 million 2022 drilling program, of which 115,000 meters is planned at Fenelon for resource expansion and infill drilling to further grow the gold mineral resources at the project. Turning to Jerritt Canyon, First Majestic provided guidance of 116,000 to 129,000 ounces of gold production in 2022 at the Jerritt Canyon mine. First Majestic continues to explore with 9 drill rigs operating at the end of Q4. Approximately 135,000 meters are planned, consisting of surface and underground infill, step out, and exploratory holes to support the life of mine. Turning to Beaufort, Monarch Mining announced completion of a 43,419 meter exploration drill program at the Beaufort mine in 2021, including final assay results. These promising results include high-grade intersections and confirms the company's view that the project has excellent discovery potential, both underground and near surface, and that there is a strong possibility of increased mineral resources on multiple fronts. Monarch is in the final stages of preparing the Beaufort mine for production that is forecast to commence in June 2022. Turning to Lamina, Gold Mining released a PEA report for the Lamina property in January 2022, outlining a 10-year mine life, producing approximately 100,000 ounces on a gold equivalency basis per year at a byproduct all-in sustaining cost of approximately $698 per ounce, and a large resource base of approximately 1.5 million ounces on a gold equivalency basis at 1.08 grams per ton. There is additional upside from drill-ready targets on the adjacent La Garucha deposit, which is currently not factored into the PEA. And then finally, turning to Lone Tree, I-80 announced its development plans for 2022 as the company commences its plan to build a comprehensive Nevada mining complex. I-80 is in the process of developing multiple mining operations to achieve its objective of building a Nevada-focused mining company with a goal of ultimately producing more than 500,000 ounces of gold annually. I-80 disclosed that it is executing a hub and spoke development plan where Lone Tree will be the hub of I-80's operations. And with that, I'd now like to turn the call back to Dave.
Well, thanks very much, John. That was an excellent update. And I have to say, it's really the tip of the iceberg with 192 royalties in the portfolio. You can imagine we could spend the day here going through all of our sundry assets across the development spectrum from early stage exploration right through to production. But what I would say is that since the fourth quarter of last year, when we last updated you on our portfolio, we've been extremely busy. And that included entering into the agreement to acquire the near-term and long-life royalty on IAMGOLD's Canadian Cote project. We strengthened the board with the addition of Carrie Howlett, who is a renowned ESG Canadian expert, and she's joined the board just a week or so ago. We added a third research analyst covering the company. BMO launched research on us as well. H.C. Wainwright and Haywood launched research last year, and we're their top pick for 2022 in the royalty sector. We secured a flexibility enhancing credit facility, $25 million from the Bank of Montreal as well. And I think more importantly, we declared an inaugural dividend, which I think is unprecedented for a company of our relative youth. We only launched the company 11 months ago with our IPO in March of 2021, and we're already paying a dividend, returning capital to shareholders. And I have to say, given our growth trajectory and revenue over the coming years, there's more to come on the dividend side, in my view. And so please watch this space. It's the beginning of returning capital to shareholders. And of course, we launched a takeover bid for Elemental as we continue what I think is much needed consolidation in the sector to create that scale, to attract a broader institutional base of shareholders and achieve a re-rate for our shareholders as we achieve that scale. We've done a very, very good job, I think, since our IPO, going from 14 royalties in March of last year to 192 royalties, and introducing 28 that are cash flowing in the development stage that introduces a significant growth trajectory in cash flow in the short term, which again gave us the confidence to introduce that dividend. And I think gives me the confidence to say I expect that dividend to grow as our cash flow grows over the coming several years. So it's just the beginning for us. The IPO is really a launch of something very special. But as you can see, we've been working with all due haste to create a company that you're proud of, return capital to shareholders, and generate superior rates of return in a rising gold price environment. With that, Mark, I'd be delighted to take questions from our participants today and our shareholders. Thank you.
That's terrific. Gentlemen, thank you very much for a great tour through what certainly could be said is a lot of activity at the company since IPO. It's on a good day, it's hard to keep track of the moves. There's so much exciting news coming out of GROY these days. So congratulations on all the evolution and development. I think we have quite a busy question and answer column, of course. I know a lot of interested investors would like to hear right from the source. So we're going to jump right in here. But I do want to start, as you mentioned, David, geopolitical situation around in the Europe, Ukraine, Russia situation. Just curious your thoughts, gentlemen, in terms of when these world events happen. Obviously, gold is a fluctuating market. What are your thoughts on that today?
So first off, on a personal basis, I have a son that serves in the military. He's in the Royal Canadian Air Force. And so for all those people that are on the phone that have family members in the military or have served in the military, thank you for your service. These are fraught times. And so I want to make sure that we don't lose sight of the fact that people's lives are at risk. And I don't want to diminish that and just talk about the financial implications. There's a real human toll to what's happening in the Ukraine. And I wish everybody that has family members in the military all the best. And again, thank you for your service. What I would say is on the financial side is that these types of things do tend to have a positive impact on the gold price, but I think that's a short-term phenomenon. I think really what drives capital into gold is interest rate differentials. And right now, with interest rates on a real basis deeply into negative territory, that's hugely bullish for gold. Gold is a financial instrument more than it is a commodity. It's a currency. And when there's no opportunity cost to owning gold, that's typically when capital is driven to gold. And given that interest rates on a nominal basis are effectively zero, and on a real basis, deeply into double-digit territory on the negative side, because I think inflation's not 7.5%. I think if you're putting food in your stomach, you're putting gas in your car, you're putting a roof over your head, you're deeply into double-digit territory in inflation. Mm-hmm. So we are in a hyperinflationary cycle. And I think gold has held its value very well and is starting to accelerate upwards as well as a barometer of what's happening on the inflation side and as a barometer of what's likely to continue to happen on the interest rate side, as I think we're going to be driven deeper and deeper into negative real territory as inflation continues to accelerate.
Terrific, David. Thank you very much for that. A very timely comment and really good to get the perspective on a global situation. Now let's focus inside the company here. A lot of questions coming through from around the world here, gentlemen. I'll start off with, does Gold Royalty have other acquisitions on the horizon? How will Gold Royalty pay for these and the Elemental transaction?
John, I'll hand it over to you.
Thank you for the question. I think what I'd like to highlight is since we went public, we've evaluated more than 90 opportunities. Many of those opportunities we've passed on for various reasons. There's certainly no shortage of growth in the company, and yes, we do have the potential for further acquisitions. Regarding Elemental, we're paying for Elemental by using our shares. It's an exchange ratio that we've proposed to Elemental shareholders. And I think we feel very confident with our strong balance sheet, cash and marketable securities on hand, plus our undrawn credit lines, that we've got the ability to continue to acquire additional assets, such as the recently announced Cote acquisition. So that's going to complement our tremendous organic growth, which, as Dave mentioned, is peer leading among our sector.
Terrific. That's very good. Thanks, John, for that. A question comes in from Brendan. Do you see another finance raise happening in the future which would dilute existing shareholders?
I think whenever we tap the market for capital, whether it's debt or equity, we expect to do so with a use of proceeds that adds value on a per share basis. And I think that's what I would say. If we ever go back to our shareholders for money, it's because we expect to deploy that capital to create value. Right now, there are no plans to go to the market. But what I would say is that we're looking at per share value creation. We are issuing, as John said, equity to buy Elemental. We're doing a share for share exchange. So we are increasing the number of shares outstanding, but we think that is value accretive and certainly cash flow per share accretive in the short term.
Terrific. Thank you both on that. A couple of questions coming in about the share price, gentlemen. So we'll dive in a little bit. Coming out of Germany, a question about significant underperformance, in their opinion, of GROI to the gold price development. To what extent do you contribute this to the overhang created by almost the recent mergers and acquisitions transactions? Were they done at a premium? Any thoughts generally on the share price that you can share with our audience today?
Yeah, look, I think if you look at our share price performance actually since the IPO, and remember that we actually issued a unit that included a half warrant, our stock has held value when the rest of the sector has gone down. The warrants are trading, by the way, on the NYSE as well, under the same trading symbol with the warrant suffix on it. And if you add the value of the warrant, we've actually retained significant value for our shareholders in a very, very difficult environment for gold equities. The GDXJ is down over the last year. There's been an overhang in the gold equity space because of the specter of inflation. The mining industry is not immune from inflation. And because of that, we've seen gold equity significantly underperform, much like we saw 10 years ago coming out of the credit crisis when the gold price did extremely well, but the mining equities did not keep pace with the commodity because of the concern of input cost inflation. We're re-experiencing that phenomenon in the mining industry. And that's why I think it's best to play the gold price, a rising gold price, in my view, in the royalty and streaming space, where we provide that top line exposure, optimum leverage to the gold price. We provide exposure to exploration success, but we completely insulate our shareholders from input cost inflation. So I think we're poised for significant outperformance. And as we demonstrated a little earlier on, there's a lot of real estate between the smaller cap players and the large cap players in the space in terms of trading multiple. There's a significant opportunity for a re-rate here as we continue to grow our business. And given that we have peer leading revenue growth, we're best positioned to provide that kind of outperformance in a rising gold price environment.
Terrific, John. Thank you very much for that. I appreciate that, David. I do want to ask about the Cote royalty process. Let's go into a little bit more of a microscopic perspective here. Can you share with us from the inside view, gentlemen, about the process for acquiring Cote?
John?
Yes, absolutely. The asset was sold out of an estate. So it was a private seller. We think that there was a discrete level of competition for the asset, including some of the what I would call large cap companies in our space. And I think we took advantage of our technical expertise to evaluate the royalty, the coverage, and determine what we thought was going to be an accretive transaction for our shareholders. I think our ability to move quickly to negotiate and to reach an agreement with the seller really put us in pole position. And we're really, really thrilled to have been able to consummate this transaction. I think last year there were 2 other transactions done on the Cote project, one by Royal Gold and one by Metalla. So I think we're in very good company in terms of royalty companies who've got a focus on what is going to be one of Canada's largest open pit mines.
Wonderful. We do have a couple of questions coming in around dividends, gentlemen, back to back here. So I'm going to dive in quite openly from two different viewers. Just in terms of your viewpoint overall regarding dividends, we have a couple of our retired folks that have joined us today and are very curious about cash flow overall as they move into their golden years. I'm not that far away from that myself. So curious about your ideas around dividends, gentlemen.
Well, I'm not that far from that either. So thank you for that. That's an excellent question. Look, the royalty business at the end of the day is a collection of annuities. And there's no reason why we shouldn't share the benefit of those annuities with our shareholders through a dividend. We should be creating an annuity for them. And so I say dividend is core to our strategy or philosophy as we run this company and grow it. And given our sector-leading growth profile and revenue, 58% over the next 3 years, we're in a great position to look at increasing that dividend over time.
Fantastic. Exciting to hear that forecast, David. Thank you very much for that. Just in terms of inside the company, I can't help but ask this from the outside. When mergers and acquisitions are happening and the growth of the company is happening at the rate that it is, what are the top, say, 2 or 3 priorities each and every time that a merger acquisition happens for the mother company, would you say, just for our audience to give a sense of strategy and how things work on the inside?
John?
Yeah, I think at the end of the day, when you acquire a company, there are really 2 key things. One is the people, and the other is the assets. And in our case, we've been extremely fortunate to be able to retain some prodigious talent in the form of board members and also consultants to the company going forward. And I'd highlight examples of Trey Wasser, Jerry Bowman, and Glenn Mullen as examples of that. And I think that really brings a tremendous amount of additional depth and breadth to our ability to continue to execute on our strategy. And at the same time, as I mentioned, bringing in the other element, the other key element, which is assets. I think one of the beauties of the royalty sector is that these are not companies endowed with a significant management teams and headcount. So fortunately for us, there isn't a very dramatic process of headcount reduction. But we are very focused on integration, as you will obviously appreciate, given the activity. We've become quite good at it, I believe. But I think the key focus is those 2 things: the people and the assets.
Wonderful. John, thank you for that perspective. Appreciate that. Another question comes in asking, how exactly does trading liquidity benefit Gold Royalty's valuation and your shareholders? John, please.
I think it's one of those topics that I think I'm going to borrow a line from one of the previous iterations of our conversations with our shareholders, where Dave talks about this sort of virtuous cycle. And what it means, I think improved trading liquidity increases valuation. Increasing valuation provides a lower cost of capital. A lower cost of capital can be deployed back into the business to acquire additional assets and continue growth. So trading liquidity is very important for continuing to ensure that this cycle of being able to access the capital markets, deploy it in accretive transactions to grow the company for our shareholders, to be able to continue to grow our dividend and our shareholder distributions is all very much intricately related, that virtuous cycle, if you will.
Terrific, John. Good thorough tour there. Thank you. We have a question from Andu. It's a bit two-sided here, so follow me if you can here. Just are you able to provide a percentage of quantity of how many elemental shares have been tendered? Is number A. Number B, as I say, also, do you still feel confident that the transaction will close?
Yeah, so it's a bit early to talk about tendering because the bid has to remain open until April 27th. So as you can imagine, the tendering process is still very much in the early stages. We believe we've provided full and fair value to elemental shareholders. And I think evidence of that is the fact there's really been no other suitors that come to the table in spite of almost 2 months now of them running a process to look for alternatives. So we believe we've offered them fair value, and we're confident that in due course we will succeed.
Terrific, David. Thank you for that. Another question comes in from Chris. Does the East Goldie deposit trend back into your royalty ground at depth? And can you talk about the blue sky at Malartic overall?
John, please.
Yeah, I think the blue sky at Canadian Malartic is tremendous. I think one of the again, I'm going to borrow a phrase that I've heard Dave quote. The deposits in this part of the world tend to bloom at depth. And I think as the partnership between Agnico and Yamana are able to continue drilling from underground, I think we're really going to see this whole infrastructure and the resources around it blossom significantly. I think right now, if you look at some of the disclosure from Yamana, the roughly 18-year mine life could potentially be doubled at the same level of production, just given the prodigious exploration potential at Canadian Malartic as a whole.
I appreciate that very much, John. Thank you for that. Always want to go to one of our go-to questions, which is, let's look at some of the turning points over the next 3, 6 to 12 months. We've talked about some business on deck that we've explored with you, but just in terms of the bird's eye view, if you could give us a couple of benchmarks over the next 3, 6 to 12 months of what we should be looking for at Roy.
Well, I think we're in a very catalyst-rich cycle right now. There are a number of our projects that are achieving significant milestones, not least of which is Cote starting up production next year. Beaufort Monarch's restart is going to happen in the middle of this year, June of this year. That'll bring incremental cash flow growth over the course of this year. We talked about Canadian Malartic. They're well advanced in construction. They start shaft sinking on Odyssey in the fourth quarter of this year, and actually start to see some incremental production next year based on Agnico's conference call this morning on their quarterly results. So they're starting to mix underground resource from Odyssey, where we have a higher royalty, with the open pit material that they're putting through the mill currently from the existing Canadian Malartic pit and the Goldie pit as well. So lots of catalysts within that portfolio. Ren, as you saw, published an inaugural resource, very, very rich grade, over 7 grams per ton. That's the underground extension at Goldstrike. And there's been significant high-grade step-out drill results from that exploration program conducted by Barrick as the operator there. And so we expect, given that high-grade material, that Barrick will place a priority on resequencing their mine plan to include that underground material sooner rather than later. So that'll represent significant cash flow for growth for us as well, because we have both an NSR and an NPI royalty on the Ren deposit. So I could go on and on. As I said, we have 192 royalties in the portfolio. We have a lot of embedded growth within that portfolio, and not least of which is our royalty generator model in Quebec and Nevada, run by Glenn Mullen and Jerry Baughman, respectively.
Yes.
We're staking exploration claims continuously, farming out those property, taking royalties back. So I expect our royalty portfolio will continue to grow at virtually no cost, because the work that Jerry and Glenn does is really quite costless to us. When cost is required or investment is required on those properties, we farm them out to established operators and producers and take a royalty back. So we have a lot of organic growth embedded in our portfolio above and beyond the 192 royalties that we already own.
I appreciate that. Thank you very much, David. A question to both of you, gentlemen. I mean, look back 6 months to a year ago when we were having some of our earlier conversations online with an audience from around the world. COVID was very much a big topic of discussion. How is the mining industry getting through what's happening as a pandemic internationally? I'm just curious at this point, at this stage where we are, lots of conversations, lots of debates, but we are seeing a moving trend here. So just a bit of a weather check on where things are with the pandemic, operations, staffing, et cetera, just to see where we are here this late in February.
Well, look, I think if you look at the broader mining industry, both on the base and precious side, I think they've done a remarkable job of coping through the pandemic and adapting. But what they haven't been able to tame is inflation and their input costs. And we've seen dramatic cost inflation on the few projects that are in development. We've seen dramatic capital cost inflation. And not least of which is on Cote mine, for example, which has had to re-baseline their capital costs a couple of times, and have had to do that again as they retool their management and board. And so that's really why it's so important, I think, to be in the royalty space, is to insulate yourself from that kind of cost inflation. We don't have to put another dime into Cote. We made our investment, and regardless of what happens to their capital and operating cost profile, we continue to get our royalty, which is the beauty of the royalty model, providing optimum leverage to the gold price and optimum leverage to exploration success while insulating you from input cost inflation. So I think that's going to be a recurring theme in the mining industry. As I said earlier on, I think that's created an overhang in the performance of the producers in terms of their equity price performance, and will continue to create an overhang in my view. So I think gold is set to fly because of the interest rate dynamics I talked about earlier on, the quantitative easing that's likely to continue, particularly in these politically fraught times. And I think you want to make sure that you get optimum leverage to the gold price while protecting yourself from inflation.
Well said, David. Thank you. John, I'm going to turn this focus over to you for a moment as Chief Development Officer. I'm always curious when a human like yourself drives home from work at the end of the day, what gets you most excited about this company? There's a lot of moving parts. Obviously, clear evolution has been happening over the last number of months. I mean, David and I started talking when Ely Gold was still in the works, and we've been tracking your remarkable transformation. But for you, John, what excites you about the company as you wind down for the day? The thoughts that come to you that say we're moving in the right direction.
A philosophical question. I think I had a wonderful career as an investment banker, focused on finance, advising and helping mining companies over nearly 30 years. And I really relish that career, but I wanted to take a different path. I've always wanted to work on the corporate side. And I think really what attracted me to this opportunity was really the people. I've known Dave for a very long time. I've had the great pleasure of being able to work with him when he was the CFO of Agnico, the CEO of Hudbay, and then most recently at Goldcorp. And it's really those relationships that in what I would call this new phase of my career, that really excite me and get me motivated. I think one of the sort of foundations of our company was all the work that Amir Adnani had done building gold mining,
yes, from
which Gold Royalty was formed. And to get to know Amir and the way that he has created value for shareholders over so many companies is just really a great inspiration for me. And then working with folks like Alistair Still, who I had the opportunity of working with as an investment banker, but never as a colleague. And it's just been a really refreshing career change for me, really invigorating. And quite frankly, I'm almost as busy with all the activity that we've had building this company as I was as an investment banker.
Fair enough, and well shared. I love the energy of that, John. Thank you for sharing it. A good friend of mine runs a branding agency down in Australia, and she calls this your second mountain. I've always loved that term, which is your second mountain. Let's move back to a couple of questions in our column from our viewers around the world. Victor is asking, would you consider, gentlemen, investing directly in gold producers, junior explorers in Tier 1 districts with deposits close to existing projects in your portfolio?
Well, we do that by and large anyways. I mean, we stake exploration claims. I call them neurology plays, where we stake property claims around existing deposits, existing operations, and then wait until those operators and explorers require those properties to continue their exploration programs. Gold deposits don't understand man-made boundaries, but we do. And that's where we add value. Through Jerry Baughman's efforts, through Glenn Mullen's efforts on the ground. We have people that understand the business from the grassroots up and can create value doing that.
Wonderful. Thank you. I do want to acknowledge a terrific comment from a friend from Denmark here chiming in saying, love your amazing story, just doubled my investment. People is truly everything. So I love that we're getting some tokens from across, especially with what's going on in Europe. Some good news there. Next steps, I would think, gentlemen, for us is as we gather and continue to watch the evolution at Gold Royalty. As we've talked about, people are everything. Basically, it's about who's behind the steering wheel, who's on the bus at the company. So, are there one or two kind of top recently added talent? We've talked about the board briefly, but just one more round at who we should be watching that's joined the journey at Gold Royalty.
We've added a couple of people recently, and that includes Eric Chen, who's our Vice President of Geology. And Eric worked with me at Gold Corp and was responsible for our reserve modeling. So we've added a bit more additional geological depth within the organization. I think that's extremely important because it does start with the quality of the deposit.
Yes.
And the quality of the operators, and having that kind of internal expertise is important. I mentioned the addition of Carrie Howlett to our board to ensure that our ESG practices are world standard, and she'll help build out that expertise within the organization. But what I would also say, it's going to be very rare where I talk about the addition of people. This is an eminently scalable business. We have a core of about 6-7 full-time employees that could run a business 10 times the size of what we have today. And that's the beauty of our business. Every incremental dollar of revenue goes right to the bottom line for our shareholders.
Fantastic. I can say with some confidence, in our humble opinion here at VID conferences, Gold Royalty is a living, breathing thing. It never seems to stop evolving and adding on the journey as you move forward, gentlemen. So congratulations on the success to date, the great team that you've brought on board. And with everything going on in the world today, whether it's a pandemic or aggression in terms of military in the geopolitical space, it's really often fine for us to check in with Gold Royalty and see where things are as a company. So I appreciate that. Any last minute thoughts before we wrap up? We're 3/4 of the hour in here, gentlemen. I just want to make sure I provide an opportunity for what we call the open mic, that either points we haven't touched on or any new information that's come to mind.
No, all I would say is I'd go back to the fundamentals of gold, and we are, I think, in the process of seeing a significant rally in the gold price. And the question you have to ask yourself as investors is, how do you best play that? To protect your savings, to protect your capital, to protect yourself against the ravages of inflation. And I think we're best positioned at Gold Royalty to provide that optimum leverage to the gold price, exploration success, and protect you from inflation, given the low-cost nature of our business, how scalable it is, the small employee group that we have, low G&A costs, and tremendous revenue growth over the next few years, even without a gold price rally.
Fantastic, David. Thank you. John, any last parting thoughts from your viewpoint?
No, I think, we've managed to assemble a portfolio of assets, just got tremendous balance. And, we've got great organic growth in that portfolio. We've got organic growth coming from our, our prospector activities in both Nevada and Quebec and Ontario. And then obviously my responsibility is growth on the M&A front. And I think we've demonstrated with the announcement of 5 transactions in 11 months, the ability to get moving on that front. So I think, just stay with us. This is going to be a tremendous story. We're building something really exciting. And, I just feel really privileged to be part of the team.
Fantastic, John. Thank you for that energy. As we wind down the hour here, gentlemen, I want to say thank you very much on behalf of everyone here at VID Forum and VID conferences. It's always a pleasure to walk with you and share with an audience from around the world. So continued success. Best of luck with the upcoming shifts and moves. There's always something interesting happening at Gold Royalty, and it's a real delight to meet with both of you again. So I'll say thank you very much for your time.
Thank you.
Thank you, Mark.
Much appreciated. For everyone else who's been watching around the world, we appreciate your energy, letting us know where you've been tuning in from around the world. And of course, the questions, which aside from these two beautiful gentlemen who share from inside the company, the questions really do drive these sessions. And we're always thrilled to bring VID Forum to an audience internationally. So I will say thank you very much, gentlemen, one more time. Stay safe out there, and we'll look forward to our next session to follow up with Gold Royalty. All the best for now. Take care.